Happy Friday, traders. Good morning from Chicago. It is 8:02 a.m. Chicago time on Friday, the 5th of October, 2018. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as I'm sure you've heard, non-farm payrolls, unemployment is front and center. The numbers came out, although they didn't meet the consensus. They're pretty strong for several months running, with the unemployment rate falling to 3.7%. 3.7%. That's an entire. The last time we saw it that low is 1969. So pretty heated. So with the non-farm payrolls missing, the market's reaction was to pop higher. In fact, it had popped higher before the number came out, before the actual deadline for the number at 7:30 Central, 8:30 Eastern. Very interesting. And then, of course, we pop up. We were unable to, and this is in the ES, of course, the Treasuries had kind of an interesting move as well. We pop up in ES and we fall right back off, down to below 2,900. And now here we are hovering at yesterday's close. So this is the SOC, by the way, for the ES right here, 2906 on that release. It's really interesting that it pushed symmetrically. Well, not quite symmetrically, but it pushed up and it pushed down, and then we ended up in the same spot where it all started. So that's how things are shaping up. This morning's market sentiment, given the overnight action. The DAX is way off. The laggard today, compared to other products, is down 1%, 121 points. The Euro stock's down 24 points. We have a mixed bag from there. There really is. The Russell's just slightly up, 1.5 points. Gold leading the pack. There's a slight sentiment, a slight lean towards risk aversion this morning. The S&P is basically unched down 3 ticks, and the Dow basically unched down a tick. I see money going into safety, gold, the cable, the euro, and the yen positive. And so that's how things are shaping up this morning. As far as what we've got moving ahead, we have consumer credit this afternoon at 3 p.m. Eastern, and we have a bunch of we had some ECB speakers earlier this morning, and then we have Fed Speaker Kaplan, a non-voting member, at 12:30, and we have Fed Speaker Bostic, a voting member, at 12:40, and that wraps up the week. It is Friday. So, take it easy this afternoon. Don't get yourself in trouble and go into a weekend with a hole in your pocket. Let's move on to what we expected yesterday. Yesterday, given where we opened, that does not look like just a kind of like a Medusa kind of layout. Because of where we're opening yesterday and the context of balance that tried to move to the upside and has fallen back off, I had to cover 4 scenarios instead of the usual 2. The key scenario expectation really was for it to likely continue lower. On Wednesday, we had a sell-off into the close on a double distribution day. So I expected the selling to continue, but I also expected, because we're in the bigger balance zone here, the normal or the expected behavior and the most common behavior is that we would be responsive meaning we would open in an open auction most likely, but at some point we would be responsive back into the range. And I expected around 29, 28, 29, 30, and then an impulse down, and then we start to move lower, which gives us a lower bottom or a higher price on the bottom with a decent sized range. That's not what happened. We had basically scenario 3 play out, and even scenario 3 didn't see the light of day in terms of responsive buying. So we ended up with a gap, with a small gap zone. I think it was 1.5, 6 ticks before selling started. And my target for the day was just below 2,900, 2,898 or so. And that's really what played out. Here's what things look like. So we didn't get scenario 1. We didn't get scenario 2. We got scenario 3. And you know what? Scenario 3 was obvious from the very, 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 very beginning. My comments, my running commentary in Convergence chat room was to say, if I can stop you from buying this thing, then I've probably saved you a lot of money. And that is correct. I've seen this happen too many times, and I've fought the market too many times when it opens, and it just does not have any power to the upside. So what we had is an open at 29.2375, and it upticked, and then we had it's not really a strong impulse, 4.5 point drop, but the volume that it dropped in was fairly decent for a quick for an opening flush. It dropped to 7,700 negative on the delta. That's pretty significant on a single move. And then if it was going to go into an open auction out of range, we would expect it to chop around through the mid and then to start to challenge that high, put in an opening swing high. So we have a nice clean opening swing high, opening swing low. And then now we're looking for, okay, it might get responsive, or it might reject at the prior high, low, and start moving. This didn't do that at all. It had very little in terms of upward rotation, but the volume scope, the action on the order flow showed that as it was selling, there was quite a bit of buying going on. There was a lot of absorbing on the way down. So there's a lot of volume just trading through as this thing was dropping. Okay, and so we rotate down. 29.1775 is the first key area. That's the first stock zone. So we get a nice rotation up of about 4 points. Then it retests, breaks through, moves to the next area, and so on and so forth. Actually, that wasn't the stock zone. It was 29.19 area was key yesterday. So overall, we just drop through, and as we move forward, if you watch the narrative here, it has a really hard time coming back to the mid. It has a hard time getting good positive rotations. Let me set the rotations here up. Okay, so if you look at the bottom pane here, if you look at the positive rotations, we start to see some pretty good action here. We have a big downward rotation, 6.25 points. I consider that an impulse. I'm expecting this low to break, this impulse low to break, but we start to see some pretty good action on the buy side, and that's where I start to caution late shorts from getting in. Even though I expect it to continue, it might push all the way back to 29.15, the mid area. And so we have our range extension down as expected. So when the impulse is completed, and it just continues. Here we are at 2,900. Remember the goal yesterday, the target yesterday was around 2,901 on scenario 3. Breaks through the century figure, the 2,900, gets down to the big microcomposite point of control at 28.94. One ticks it. I'll show you that in a second. And then we finally get the biggest impulse of the day on the largest delta for the day. Okay, so this is saying, okay, we've found our buyers. That's what this is saying. 28.94, we've got them. We've got our buyers. We've moved prices deeply enough that we have interested buyers, because that's the first rotation of the day that actually has meaningful volume to the upside, and the price to match. And that's when we go into balance. So now we're conflicted. We start to drift down, which is not expected. So we would expect this to push up, pull back, and then make its way up, and at least make an attempt before failing through. Just buyers are just unable to keep it up. So we have the big up rotation, and then we have these down rotations right after this, these strong down rotations right after. And it basically is in balance at this point. So it's still looking for these real buyers again, and they're just not getting in there. So it starts to balance out. See that it's this whole area here. This whole area here starts to balance out. Where is it balancing out? Why is it balancing out? Why could it? I don't know, is or isn't. I keep talking. I need to catch myself these days. I keep talking in definitives. There's nothing definitive about the market. I don't know what the market's thinking, because it's not just one person. But what could be holding this from going into balance down here? Even though we did get a good bounce off the MC point of control, we couldn't sustain those prices, and we ended up falling back through. And here we are in balance. And the reason for that is classic. The MC point of control, this is the most traded price. The value price of this area is right here. And so we kind of stick around and bounce around for quite some time right here at the MC point of control. And balance leads to imbalance again. And so we start to get into imbalance on the upside. Okay? So that's how things played out. And that's the end of it. The profile's very stretched. The IB was very wide yesterday, unusually wide IB, very meaningful selling. We had I believe it was 1.8 million contracts. 1.83 million contracts that traded yesterday. Pretty meaningful volume. However, something to note about yesterday's close. A couple things to note about yesterday's close. We closed above the MC point of control that I talked about. Let's turn that on. That 28.94 closed above there. Okay, that's one piece. We closed above the mid, above the IB, above VWAP, at the point of control. Okay, above the century figure, 2,900. And my prediction for the overnight session is 29.19. 29.19. I expected this to most likely drift back up to 29.19 before the cash opened today. Definitely was off. The best it could do was 29.15.50, off by 3.5 points. But I did expect this to continue higher and push into 29.17, 29.19, something like that. And it wasn't able to do it. This is pretty good selling here. Good volume. It's an open and run, so we have a gap and run situation. So it's initiative. It's a new kind of sentiment out of balance, pushing lower, out of the most recent balance of several days. And we left a gap behind. So those are all pretty bearish signs. But if you go back a little bit and check out what happens on days like this, we tend to get a pretty good bounce right after. These drops are seen as value because the overall trend on the higher time frame is still pretty strong. So, let's look at that. These charts have flipped for some reason. Let's look at that. I mean, What has the S&P given up so far? So if we look, these are daily bars, daily pit session only bars. Let's zoom out for context. How much have we really given up in terms of price? Why would I think that somehow this thing is has turned bearish because of a selling day? What's bearish about this? Really, you've got to step away and look at the bigger picture. This is the February sell-off. This could be perceived as, holy moly, this thing is done, with an attempt at a pullback and then a run at the low. That could be a topping action, not the sharp drop, but the attempt higher and then the roll. Tops tend not to be one sharp peak. They tend to be a peak and a retest and a retest and then ultimately failure. And what we have so far is really nothing more than a pullback inside of a channel, a very bullish channel. So please keep that in mind. If I pull back to show you what I'm talking about in terms of the balance areas, so here's that 28.94. The 28.94 is where we made a new all-time high on the 29th. So we gapped up the 27th, ran up in August to the 29th, and then from there, that was the all-time high before we pulled back, and we just balanced out until we popped higher on the 20th, made a new all-time high the 20th, the 21st, the current all-time high, and then we've been balancing since with an upward skew. And then yesterday, we fell from that balance price. Basically, the prior day at 27.50, and we were initiative. And what do? We stab right into this point of control, this next most valuable price in the area. So there's a price here at 29.03, something like that. 29.03 is a high volume node. I expected that it might stall at 29.03, overshoot by 29.01. That was scenario 1 or scenario 3, right? That's where I come up with this. Okay, but it could not hold, so it went to the next area down, 28.94. We got a quick bounce, then we got the biggest bounce, the biggest positive bounce of the day happened right off of 28.94. It's not a coincidence. And by the way, I've been seeing this kind of behavior for the last 13 years since I got into market profiling, and then later on changed my view and developed a view in volume profiling. See this kind of behavior for quite some time. We bounce right off. We get a 10-point bounce on really good volume, and then it ends up pulling back like I just covered and going sideways. I've run out of time. Going sideways before it pokes lower, and then it finishes where? It finishes inside of the boundary, the lower boundary of the prior bounce, and that's why I expect it to drift back up into 29.20 or so, 29.19, 29.17. That's where that comes from. Whew, that's a lot to cover. All right, so what have we done overnight? Overnight, we open up and we immediately have the push up that was expected. I expected it to kind of push up here. Did not do that. And then we get some selling on the Asian session, consolidation, and it fell off to 2,975 with the European Open. The European Open was right here. Okay, remember the DAX is the laggard today. And we've just been drifting sideways until the non-farm payrolls released. The non-farm payrolls is right there. That's the range, 29.15 to 28.98, almost symmetrical. Almost symmetrical, and now it's hanging out where? Where is it hanging out? It's hanging out on top of the overnight mid, on top of the overnight VWAP, on top of the overnight point of control, on top of yesterday's close. What does all that tell us? All that basically tells us that the market's really balanced. So we found utopia in terms of value right on top of yesterday's close, 29.07. And that's where we are now, which leaves us with this kind of interesting position in that we're opening in quote unquote value. This is not a typical trend day profile, by the way. Those of you who felt like this was trend, this was not trend. This does not, at least in my book, this does not qualify. Yesterday did not qualify as a trend day down. Yes, the range was wide. Yes, there was a lot of volume, but it's not a trend. Why? Because in a trend, you have value migration down. We don't find a real value. We end up with value migration down. And even though the VPOC may not shift down on a trend, the market is not able to find the opposing force. So in a trend, we tend to finish in the lower quartile of the range. And what that sets us up for is a consolidation overnight and then a push lower the next day for potentially an extension and balance. What this did yesterday is really, it just balanced out. It just balanced out. In the last hour and a half, it really just reached equilibrium. And so what we ended up with is actually a pretty legitimate distribution. Pretty legitimate distribution into the close. And that'll screw with people, like those people who are looking for a pullback to sell all day. Man, I haven't done anything. I need to sell. Don't buy. And they finally look for a place to sell, and it just squeezes and squeezes higher. It squeezes higher and squeezes higher. And that's what it did into the close yesterday. Okay. So yesterday was not entirely and exactly a trend day. Into the close, there was quite a bit of buying on pretty good volume into the close there. You could see the absorption starting right up here, a fight starting way up here, and it just kind of walked itself right back up and then finished where it did. That's what yesterday looks like. So be careful thinking that that was a trend day. Gosh, I am totally out of time, but the trade yesterday was really interesting. Okay, so what do we have for today? First, we have Like Friday. Let's not forget about that. Please take a moment to hit the like button before you take off. Just hit it. It helps me out. And let's take a look at our scenarios. The primary model or scenario that we're looking for today is an open auction in range in value. Believe it or not, we have value. An open auction in range in value. I'm expecting this to retest this 2,900. I'm expecting this to drift lower, and I'm expecting an impulse up to balance much of the day right here. I expect fatigue, trader fatigue today. I expect it to be fairly, I expect the business to be done fairly early and for things to be quite slow. Caveat today, Columbus Day is on Monday. The futures market does not recognize Columbus Day. They don't care about Columbus Day. So the market does not have modified hours, but it's a bank holiday. Okay, so a lot of financial businesses are going to be closed on Monday. And so I'm expecting this to be very quiet coming into the close. So I'm looking for a push down, an impulse up at some point, and a drift up, and then finally for it to finish right here. I expect an inside day today. It's probably not going to touch the overnight low and high. Could, but it's not likely to do that. That's the primary scenario. Oof, that's a beautiful circle. Almost a beautiful circle. Getting good with this mouse. The secondary scenario is the opposite. We are opening in range in value, so we have to look at the opposite. Open, push to 29.12. I'm looking for it to drift up. I'm looking for an impulse down. So I'm expecting that 29.12 stock zone to come into play. I'm expecting it to start to drift down, potentially push the overnight low, and then towards value low. and then hold somewhere in the middle. Today, I would temper my expectations if I were you in terms of volatility. Um, and so, in general, people coming in after a high volatility day, they come in with this having thought about all the trades they missed and how aggressive they should have been and how they could have done a lot more. And they come into a day that kind of doesn't yield that. I don't believe there's a change in the volatility regime. As of yet, nothing has really changed. Unemployment didn't really move us away. Unemployment really was absorbed, and we are back to where we were yesterday as if it never happened. Okay, so just remember that. Good luck today. Sorry it was so close, so long today, but there was a lot to cover. I'll try to condense next time. Good luck.